It's the midweek edition of Business Morning. Thank you for joining us. I am BC Adebayo. Oil prices are down today, and that's due to latest data showing a rise in crude and fuel stockpiles in the United States, which has revived concerns about oversupply and falling fuel demand in the world's largest crude consumer amid the coronavirus outbreak. We see Brent crude futures falling 1.4% to $40.59 a barrel in early trade today, after gaining nearly 1% on Tuesday. The WTI futures declined 1.9% to $38.22 a barrel, having risen about 2% in the previous session. Now, official government figures on stockpiles from the Energy Information Administration are due later today. We'll watch out for that. And of course, prices have been supported in recent weeks as OPEC Plus put in place record production cuts that they extended on Saturday. But in Saudi Arabia, Kuwait, and the UAE say that they would not continue further voluntary reductions of 1.18 million barrels per day. Of course, we'll continue to track developments in this market and bring you more updates as they come. And back home, leading cement manufacturer Boa Cement PLC has announced a 25.1% increase in revenue of 54.0 billion naira in its first quarter financial results as of March the 31st, 2020. The industrial giant, which is Nigeria's third largest listed company by market capitalization, also recorded a 15.7% increase in its profit before tax, which grew to 20.1 billion naira, while its profit after tax surged by 26.2% to 19.8 billion naira within the period. And that was backed by consolidating key markets, increased capacity, and growing market acceptance of BOA products. At the same time, the cement leader recorded 16.7% rise in earnings before interest, taxes, depreciation, and amortization, which stands at 24.6 billion naira. Its operating profit jumped by 15.6% to 21 billion naira. Earnings per share grew by 26.1% to 58 kobo, while cement volume dispatched also increased by 20%. Now, the company's managing director and CEO, Mr. Yusuf Benji, says the excellent first quarter financial results, which comes amid the COVID-19 outbreak, is yet another milestone of the cement company since its listing on the Nigerian Stock Exchange. Now, a report on the world's pension industry by corporate insurance carrier Allianz Global has ranked Nigeria 64th among 70 countries surveyed. The debut pension report of Allianz, which was launched with an indicator known as the Allianz Pension Indicator, also finds that retirement solutions are under increasing pressure in the persistent low interest rate environment, as the number of people in retirement age is expected to rise and put social security system under severe pressure. The head of employee benefits at Allianz Nigeria Insurance, Gomez Oladinde, joins us now to give some insight into this maiden survey. Good morning, and thanks for coming on Business.
Good morning. Thank you for having me.
Now, one would wonder what even informed the shift of Allianz from insurance to pension in the first place.
So Allianz, as a global body, is into insurance and asset management. And part of the asset management deals basically with insurance and mutual funds. That is why we are also interested in pensions. And the business at Allianz is protecting people and ensuring a lifelong financial well-being of all and sundry. And one of the ways to ensure the lifelong financial well-being of any individual is through a robust pension system. You know, you're working today. If I retire tomorrow, what is there for me? That is why we decided to go into this report, the pension report.
Now, with that background you're given now, talk us through the pension indicator and its three pillars that are mentioned in the report.
So the pension, the Allianz pension pillar, the Allianz pension report is based on three pillars. We have the demography, we have the sustainability, and we have the adequacy of the pension system. For the demography, we are looking at the age composition of the population. So each of the 70 countries that were x-rayed in this report, we look at their age composition. What is the old age ratio, old age dependency ratio of the populace? So for Nigeria, on this particular pillar, we came first with 1.64, and that's how good as it gets for Nigeria. In terms of the second leg of the demography pillar is financial leeway. What is the level of public debt out there by the government of the country? Africa also scored very, very high in this pillar too when it comes to the financial leeway, because the public debt compared to countries like Portugal, Italy is not as high as it is. So because of that, Africa really did well in this first pillar of the Alliance Pension Indicator. The second pillar is the sustainability pillar. And what is the sustainability pillar all about? This pillar is telling us what is the reaction of your pension system to changes in the demography. So for this pillar, we look at the retirement age. What is the current retirement age of a country? The higher the retirement age, the more sustainable your pension system is. We are looking at the sustainability in the sense that if there are shocks to the system, are there inbuilt stabilizers to ensure that your pension system is not blown apart? So you look at the level of contributors to the level of those that are actually earning pension today. There must be a balance between the two at every point in time. Otherwise, the pension system stands the risk of exploding and going into distress. Then the last leg of the Alliance Pension Indicator is the adequacy. And when we talk about adequacy, we are looking at the benefits and the coverage. So the pension that we are currently giving our people, or will be giving to pensioners in the next 10, 20, 30 years, is it enough to maintain an adequate standard of living? Is it enough to give them an adequate standard of living? And how do we measure this? For coverage, we look at those that are contributing now, those that are in the working age. What percentage of them are actually contributing to any pension of any form? For Nigeria, the record is very, very low. Less than 8% of the working population is actually contributing to any form of pension in Nigeria, according to this report. Then the flip side of coverage is those that are actually meant to be earning pensions, those that are older than 60, 65 years old. What percentage of these people are also covered by our pensions? The percentage for this one too is also very low, lesser than 7%. So on these three pillars, the only pillar that we actually did well was on the first pillar, which is the demography, because of our young population. According to the report and statistics available, the old age dependency ratio is about 2.7%. That means that ages 64 and below constitute more than 97% of our population. That means that we have a very, very young population. And because of that, we came first on this pillar. But on the sustainability pillar, we came 55th out of 70 countries.
And that's a huge gap.
And that's a huge gap. And for the adequacy, it even becomes worse. We are 68 on the adequacy pillar. That means that our current pension system is not even adequate enough to support the current pensioners, not to talk of the future generation of pensioners.
Now, looking at the report, you've talked about Nigeria, and of course, Nigeria ranks behind countries like South Africa, Kenya, and Morocco, talking about the African countries that were ranked on that list. So what lessons do we need to learn from these other African countries? What are you doing differently?
So for the first actually on the list in Africa is Egypt. The first on the list is Egypt. They came in at number 36. What they are doing differently is, one, they have a good public pension system, which makes their own adequacy a little bit better than ours. You know, on adequacy, I said we came in at number 68. I think Egypt came in at number 28 on adequacy because they have a public pension that supports their private pensions. But for Nigeria, we don't have any form of public pension. What we have is our private pensions. And when you look at our private pensions, if you look at our Pension Reform Act 2014 as amended, the act speaks majorly to those in the formal sector. The informal sector is completely left out. So the informal sector has practically no form of pension. So those are part of the lessons we should learn. We need to look at the adequacy and ensure that our pensions cover as many people as possible. Then another thing we need to learn on the sustainability is, like I told you earlier, for sustainability, the older your retirement age, the better for you. For Nigeria, for the federal civil servants, the retirement age is 60. But when you look at European countries that are topping the chart, like Sweden and Belgium, their retirement age is 67, 68. Some even have 70. So what does this mean? It means that the rate at which people are moving from contributors to pensioners, there's a balance. Apart from the fact that our retirement age is 60, the Pension Reform Act states that when you are 50 and you decide to retire, you can have full access to your pension fund. So technically, the retirement age is 50 when it comes to our pension reform act, because once I'm 50 and I decide to retire, I can have full access to my pension fund. But in other climes, if you are retiring before the retirement age, there are pension deductions. So if you are retiring at age 50, 55, they might say instead of getting 100% of your contributions, you'll be getting 80%. So that would dissuade people from retiring early.
Now, apart from the retirement age, now let's talk more about the countries that rank in the top 10. Of course, talking like Sweden, Belgium, and Denmark, just like you mentioned. What else are they doing differently apart from the retirement age, which you've compared with Nigeria?
A country like Sweden and Belgium, there are three pillars. The first pillar is the public pension. They have a functional public pension system, which is fully run by the government, that we do not have in Nigeria. The second leg is the occupational pensions, the normal one we have in Nigeria, where your employer contributes a certain percentage, you contribute a certain percentage. Then there's the third leg, which is the private pensions. So of these three legs, Nigeria has only the occupational pension. The private pension is non-existent. The public pension system is non-existent. So because of this, our pension system is inadequate to actually provide for pensioners as they fall due.
So are you saying that Nigeria should actually adopt these modules in these countries, for instance? Are you sure that it will actually work
there is
here?
no, the environment determines what you are going to adopt. What we are advocating by this report is we need to reform our pension system. Our retirement age is 60 currently. We are not saying move it to 70. We are not saying move it to 65. But look at the ideal retirement age, and let's work on that. When we talk about adequacy, like I said earlier, there is no pension coverage for the informal sector. What's it called? PENCOM has already brought out guidelines on micro pension system. But the guidelines came out in 2018. But till date, that guideline is yet to be implemented. The informal sector is still left unprotected. They have no form of pension whatsoever. So we need to look at all these things. Like I said, there is no perfect fix. You look at your environment and you have to localize your pension system to suit your environment.
Now, what role do regulators have to play in these reforms, especially in the area of financial inclusion?
So the regulators, in the areas of financial inclusion, one of the reasons why the pension level is very low is because people don't even have access to financial services. When you get to the rural areas, how many of them are banked? How do you tell somebody who is unbanked to come and start taking pensions? It is practically impossible. So it is not only the pension regulators that have a lot of job to do now. And when I say the pension regulators, it is not only PENCOM, but even CBN, when it comes to making financial services accessible to everybody, irrespective of where you stay in Nigeria, irrespective of your age, irrespective of your occupation. That is the job the regulators have to do to ensure that pension gets across each and every one.
Now, does this report in any way take into cognizance the effects of the COVID-19 pandemic?
Definitely. It doesn't really go deep into the effects of COVID-19 because the report actually is based on data available as at March 2020. So you know the full effect of the COVID came around towards the end of March. So it doesn't really look at it. But even at that, we still mentioned the effect of COVID-19 on pension systems. First and foremost, with the advent of COVID-19, we have seen that interest rates are dropping. Inflation rate is rising. Whilst your interest rate is dropping, what is the effect on the pension funds that you have today? That means that your pension funds is not going to yield much by the time you retire. When you couple this with rising inflation rates, by the time you retire in the next 10, 15, 20 years, your pension that you earn can practically buy you nothing because it has been eroded by inflation and reduced interest rate. Secondly is the issue of unemployment. Like I said earlier, the pension, the coverage is less than 8%. Now, with the pandemic, businesses are closing shop. What that means is that as businesses are closing shop, jobs will be lost. The average wage level in the country will definitely reduce, and that will bring a reduction to those that are actually contributing into the pension fund. So definitely the pandemic, COVID-19, has a direct effect on our pension system.
Now, you've talked about the informal sector, largely, left out. How do we actually incorporate the informal sector to contribute more towards pension?
So now, like I said, the Pension Reform Act 2014 is skewed towards the formal sector. They made mention of the informal sector, but it is voluntary, not compulsory. The first step is for the regulators to ensure that it is a compulsory item in the Pension Reform Act. If it is voluntary, nobody is there to enforce it. Even the one for the formal sector, is there 100% enforcement? You understand? So the first step to ensure that the informal sector is included in this is to make that microinsurance guideline that was adopted in 2018 to be implemented and made compulsory for anyone in the informal sector.
Now, when you talk about the demographic shifts now, the number of people in retirement age, of course, are expected to increase, and that will put social security system under stress. But of course, when you consider the deaths of old retirees that have been occasioned by the outbreak of COVID-19 across the globe now, is that actually, that projection, how tenable is it?
The projection of the increase in, demographic change is not something that happens overnight. It takes 10, 20, 30 years. So from the report, what they are saying, come 2050, Nigeria currently, the percentage of the number of people living above age 65 is 5.6 million. Come 2050, it is estimated from this report that that number will increase to about 16 million. That's 3 times what we have now. Now, when you have a pension system that cannot cater for 5 million people, how is that pension system going to survive when the number of people increase from 5.6 to 16 million? So that is why we need that reform now to ensure that by the time come 2050, come 2060, when the old age population ratio has increased, the pension system is robust enough to cater for each and every one.
But if you were to say what should be the content of some of those reforms, what would you like to see?
So first and foremost, what would be the content of the reforms? First and foremost, on the second pillar, sustainability, the retirement age. We need to look at the retirement age. We are not here to say this must be the ideal retirement age. You need to look at your environment. You need to look at your local realities to fix that retirement age. But leaving it at 60, leaving it at 50 is not sustainable in the long run. Then when we talk about adequacy, you must have a pension system that covers all retirees. Once you are older than 65, whether you're in the informal sector or the formal sector, you are sure that you are covered by a pension system. Then for contributions, at least 75% of the working population must be covered to have an ideal and a robust pension system.
And what about employers of labor? Do they play any role in this regard?
So like I said earlier, we have the Pension Reforms Act 2014 as amended. And this act makes it compulsory for every employer to have a pension in place for each and every one of their staff. And they have been mandated that each employee must have a retirement savings account with a PFA of his choosing. Now, the employers are to pay 10% of your earnings, while you are meant to pay 8%. Once the employers can fully comply to this, like I said earlier, we have a Pension Reform Act. Is it being adhered to 100%? Are all employers of labor, guided by their act, actually providing pensions for their employees? You hear some stories of people actually deducting these pensions from the employees, but they don't remit on time. So all these things, that's in cases like this, the employers too also have a part to play. They must ensure that each employee has a retirement savings account. Once the deductions are made, they are paid within the regulated time, because there's a regulation in the Pension Reform Act that within 30 days, you must credit the retirement savings account of each and every employee with your own contribution and the employee's contribution. But you discover that some employers deduct your contributions and don't even remit it on time. Some don't even remit at all.
And Head of Employee Benefits at Allianz Nigeria Insurance, Gomez Oladinde, thanks for coming on Business Morning. We will be unpacking the Nigeria's Q1 merchandise trade data when we return in just a moment. Don't go away. Welcome back. Nigeria's total trade declined 17.9% in the first quarter of 2020, and that's compared to the value recorded in the last quarter of 2019, but it rose marginally by 0.8% year on year. And that report, which was released by the National Bureau of Statistics yesterday, shows that the value of Nigeria's total trade stood at 8.3 trillion naira in the first quarter of the year. And while the import component is estimated at 4.2 trillion naira, the export equivalent totaled 4.08 trillion naira. Now, the head of research at AfriInvest, Abiodun Kerikwe, joins us now to unpack all of these numbers. Good morning, and thank you for joining us on the program. Tell us, what are your takeaways from these numbers?
Good morning. Thank you for having me today. Really, I don't know if this analogy would go. An apple doesn't fall too far away from the tree. I mean, this is a number to speak to the total trade level or transaction which Nigeria engaged in Q1 of 2020, and that showed that total trade was down by 17.9% on a quarter-on-quarter basis, right? And the question is, why are we seeing this contraction in trade? I mean, if as we all know, we Q1 was rather quite a tough quarter for economies globally, right? No one has ever tried to shut down the global economy before in history. For the first time, you could see countries and economies making or taking efforts to restrict movement, to restrict trade, all in the name of trying to combat the coronavirus or the corona pandemic as it is. And really that impacted on both, I mean, on trade, on export, import. It impacted on supply chain. It impacted on manufacturing all across the world. And this number is not just particular to Nigeria alone. If you situate China into it, situate US into it, situate the major economies in the world into it, it really impacted on their trade numbers. And it is just what it is. The question then is, how deep is this impact really? How deep is this impact? I think for Nigeria, it is quite deep. It is quite significant. I mean, if you look at the composition of the Nigerian economy, trade is really, really critical. Trade is key. And when the Nigerian economy also had to adopt similar measures of the rest of the world to combat the virus, it impacted on trade, it impacted on manufacturing locally and with our major trade partners all across the world.
Now, the trade composition of the report reflects 49% in exports against 50.8% in imports. How long till Nigeria becomes less import dependent?
That's a rather interesting question. As it is, right? I mean, the first time we saw a sort of increase in imports relative to export was probably going to be Q4 of 2019, which speaks to having what we call a trade deficit, right? Question: how long would Nigeria become less import dependent? I mean, this speaks basically to the structure of the Nigerian economy. We are a majorly import dependent economy. Here we've got sectors, we've got manufacturing, we've got agriculture, we've got a little bit of industrialization, but all of this are majorly smaller compared to the level of import that we do. And this is not going to likely change maybe anytime soon. The important thing is that we have to see how we can increase our major exports. And as it is, our export is crude. Crude accounts for about 72% of total exports. How we can increase it a lot more. Again, maybe you could say the decision by OPEC to sort of cut crude production within its member countries may have affected us, but then that really didn't affect us because we are not even complying with that. I think majorly for Q1, if we recall, over 70% of our total crude was hanging on the IC waiting for buyers that was at the peak of of the Saudi Arabia and Russia price war thing, and that really may also have affected our exports. And speaking long term, the need is that we need to see how we can increase export, not just on crude, across other sectors, right? And at the same time, see how we can improve on the domestication of production of some raw materials, so that we can then also reduce our imports majorly, so that if we could domesticate, major inputs for our manufacturing sector, that also would reduce total imports and then help us also boost net effect of which is the trade balance.
Now, a further breakdown of the data shows a trade deficit of 138 billion naira. And of course, this implies 2 consecutive quarters of negative balance of trade. How does this speak to the global slowdown in economic activities and the COVID-19 pandemic?
Oh, yes, like I earlier mentioned, this pretty much connects with or reflects sort of most of the measures that was taken globally and domestically, also to combat or to reduce the spread of the coronavirus as economies battle the virus, really. And that majorly is one of the key reasons why we're seeing this deficit. It really, away from the fact that Nigerian economy, again, is import dependent, which we just talked about, one of the major reasons is that our export also was somewhat down in Q1, and because crude is a key component of that exports, of our total export as a nation, and we had cargoes of food stood for a long period of time, and that really would have impacted on our export. So I think the numbers clearly mirrors how the COVID-19 has affected the global economy and the Nigerian economy in terms of trade.
Head of Research at AfriInvest, Abiodun Kerikwe, thanks for speaking with us on Business Morning.
Well, thank you for having me.
All right, it's time now to review Tuesday's trading activities at the Nigerian stock market, and Temple Ashaju is ready to take us through. Good morning, Temple. It's good to see you. So we saw the bulls maintaining their grip on the market yesterday.
Oh, yes, but it then looks like market activities beginning to wane gradually in the markets. And of course, by the time we review the numbers of yesterday, we'll get a stockbroker to tell us what to expect going forward. Yesterday, yes, we saw an appreciation of some 0.34% in the total in the key benchmark indices of the Nigerian Stock Exchange. That translates to some 44.4 billion naira in terms of addition to what we saw around the equity capitalization of the exchange, which is now at 13.21 trillion naira. I know someone is praying seriously that this gets back to 14 trillion naira. Well, this 34 basis points addition that we saw came mostly from the interest of a lot of investors on Bois Cement. Of course, BCU reeled out the numbers of Bois Cement earlier. They had declared a very positive 2019 financial year statement, and of course, a very, very impressive Q1 2020 number. These are reasons given investors, fueling the interest of investors on this particular company at this point in time. Don't forget, they also have a very impressive dividends to pay towards in the later part of the year. So when you price all that into your investment decision, it translates to so much of investor interest in this particular cement company. If you look at the activity level yesterday in the market, volume of transaction was positive, up by some 17% yesterday compared to what we did the previous trading session. But look at the value of transactions, we dipped by some 48% yesterday. And that explains the fact that what we are saying in the market has been, in the last 2 weeks, we saw serious rally in the market. Folks that bought their Zenith Bank and bought some other firms, companies around 11 naira, 10 naira plus, got a lot of room to actually exit the market. So it was an opportunity for them to exit towards the later part of last week. And of course, this week when the market opened, it was an opportunity for them to also move out of the market. So at this point in time, what we're saying, this sentiment explains a little bit of activities around sell down or profit taking, beginning to bottom out? Because yesterday, largely we saw bargain hunting in the market, especially around the mid and the smaller cap stocks in the market, except for Bois Cement, which is the large cap stock that performed well in the market. Look at deals as well. It was 4,103, 137 compared to 4,600 something, 4,600 and something that we saw in the previous trading session. In terms of activity, in terms of sectoral performance, the banking stocks were down. Yesterday, Jais Bank lost more than 5%. It explains the profit taking we talked about. Of course, FBN Holdings too has actually been blazing the trail lately. Yesterday, we saw some profits taken on this particular company as well. A couple of other banks too experienced some declines yesterday, except for UBA, which is the one that experienced some kind of buy side yesterday in the market. Consumer goods side of the market, Dangote Sugar. That's Dangote Sugar Refinery is acquiring Savannah Sugar Limited. Now, yesterday they put out a notice to the investors, especially to investors of Savannah and, of course, the investors of Dangote Sugar, that there will be a court-ordered extraordinary general meeting. That is coming up, and that is where they will get the buy-in or rejection of investors, shareholders, minority or major, as to buying of, as to the purchase or merger or rather acquisition of Savannah Sugar in the market. Industrial goods side of the market, Bois Cement contributed massively to this. Insurance space, the major contributor on the top traded security in the market yesterday was Mutual Benefit, contributed some 99 million of its units to the activity level in the market, and of course translated to some 10% gains. At the end of the day was some 21 billion naira contribution to the insurance space. Oil and gas experienced some declines across board, but O&O maintained its momentum, was up again, back up to 2 naira 75 kobo, and of course 11 PLC, which used to be Mobile now, experienced some kind of decline yesterday. It was largely profits taken in the last 2 weeks of rally that we've seen in the market. This particular company rose very, very smoothly, and of course yesterday was an opportunity for some investors to take their profits of this particular company. Yesterday performance was around some 44.62% before now, but if you price in the decline that we saw yesterday, the profit taking of 10% that we saw on this company yesterday, it returned now to 30.22%. Now look at other counters. Eternal PLC down to 2 naira 75 kobo, to 2 naira 48 kobo, and of course Japol, which had touched 30 kobo before now, also declined. Well, we have Mr. Abdurrashid Momo, who is a stockbroker with TRW Stockbrokers, joining us this morning. Good morning, Mr. Momo. Let's look at the fact that we saw bargain hunting yesterday in the market. We also saw some profit taken in the market. But if you price in the negative market sentiment, which is down by 0.62 times yesterday, what does that tell us? What's the signal that we're beginning to see in the market across all these counters?
Yeah, basically, we've been enjoying the bull rally even during the COVID-19 era and everything. For now, technically, from how I normally tell you guys, we now have a bearish divergence, which is not yet confirmed, because from the period of, let's say, the date of 5th November, April, May. Since May, the market has been range bound. That means we've been trying to break the 25,500 points. So for now, if you check out, market has been trading between 25,500 and 25,000 points. So from the chart, the market is range bound. It's not clear yet, but what I know that the next movement is going to be major. We might still hit the 26,000 points before market corrects itself close to, let's say, 20. We'll be looking at about 24 to about 23,000 points. But for now, the market is still range bound. It's all about greed and fear. The people that don't have the guts are the ones that have been out of the market for some time. But the way it works, we have market makers that try to balance the market. Example was Bois Cement, Owando. If you check most of the stocks that are traded on the floor of the exchange now, none has broken a support level. It's still range bound, which is what we call the profit taking and the rest. But I feel there's still one more rally to go before the next correction. But the correction is going to be heavy. You should just take note. It's going to be heavy.
Well, Mr. Momo, let me also ask you this. Do you think we also had, recently we had the commercial paper of MTN, 100 billion naira worth of subscription, which is very, very successful one that closed 2 days ago or thereabout. Do you think that, coupled with some other primary market activities that we've seen lately, are sort of distractions to equities market investments?
You know, as I always say, everything I look at is based on charts. Every information you've given me, I always look at the charts. You know, what I will tell you is that MTN, right, for now, okay, let me tell you one thing about TA. For every stock, or any stock that's range bound within a long time, for a long frame, let's say a stock that is range bound between a week and a month, there's going to be a breakout. And what I'm seeing in the market, even for MTN is consolidating now within a certain price of 116 to about 118.
Yeah.
It's going to be range bound for some time before it breaks out. And the breakout is either going to be on the upside or the downside. But one thing you need to know that 120 naira for MTN has been a very strong resistance point. The day MTN breaks the 120 mark, is going to about 150. So that is how we actually look at the market in TRW based on technical analysis. All information said today on the commercial paper are fed into the data. So that's how we actually predict the market, and it's been doing well for our investors who care to know.
Just before I let you go, let me get your comments on BUA Cement. I mean, they had a very impressive outing for the year 2019. Of course, their production was very impressive as well. Look at their Q1 2020, 24% in top line. I mean, what does that tell you about Q2 going forward, pricing in the whole COVID-19 pandemic effect, and of course the fact that we had lockdown, we had the crude oil price, which actually hit the floors at some point as well?
One answer I need to give you, right? What are investors interested in? Is it a good buy? What price are you looking at? For me, we have two prices for BUA Cement. We have the 45 naira range and 54 naira range. But we still have correction towards the 38 naira. So for long-term investors, BUA is still a good buy. We have two price limits, 45 naira and about 54 naira. Target price.
And of course, there's a dividend payout that is coming up in September or thereabouts. So all of that, when you put together, will continue to push up the indices. Mr. Abdulrasheed Momo, thank you so much for sharing your thoughts with us on the program this morning. I appreciate it, and we wish you a profitable trading day. So let's move on and look at other aspects of the market. The NASD OTC, which is the unlisted securities end of the market, was negative yesterday by about 1%. Of course, this indicates some kind of profit taking as well across some of the major counters. Of course, we had the market capitalization at a little above 500 billion naira. Looks like something that is going to depreciate further if we don't see so much of interest in the markets. Yesterday, Niger Delta Exploration Production Company was the only company that traded, and of course, it experienced some serious decline. It was down all the way from 300 naira to 270-something kobo eventually in the market. Accounted for these 4 deals that we had in the market, and of course the volume was 166,300 with the value coming in at 45.1 million naira. This is one particular company that has actually been leading this particular side of the market. You have this company NDEP investing in modular refinery, carrying out so much of production activities in the Niger Delta side of the country, and that's why the name is Niger Delta Exploration Production Company. BC, I hope you're interested in that.
Temple, I'll give you my answer much later after the program. Of course, we're still coming back to you to give us the numbers from the debt and currencies market, plus an opening call to London when we return in just a moment. Please stay with us. Now let's take a trip to the UK, where Juliana Olayinka is standing by to discuss today's business headlines. Good morning, Juliana. So the U.S. Secretary of State Mike Pompeo has criticized the British bank HSBC for supporting China's move to end Hong Kong's autonomy, calling it a corporate cartel. Now, what does he mean by that? Is it all about the nuclear power plant?
Good morning, Bissy. I'm not sure about the nuclear power plant, but as we all know, China and the US, the world's two biggest economies, have been involved in a back and forth spat for several months now. And of course, that has been exacerbated by the COVID-19 crisis and China's handling of it. And Mike Pompeo, the US Secretary, these comments are just another spat in the war of words. And now it's about HSBC, which is a London headquartered but Asia focused huge bank. Most of their clients come from Asia. And last week, quite controversially, they co-signed a petition for backing Chinese national security laws, which will have a direct implication on Hong Kong and how the international world treats Hong Kong. We hadn't actually heard much from Mike Pompeo up until yesterday, where he said the Hong Kong HSBC case is a cautionary tale and that it should serve as a warning to any other government or any other business on being too reliant upon Chinese money. He actually used the case to also talk about Huawei and urging national governments to stop using Huawei and to prevent them from building their 5G network, which he says will cause national security laws. Just yesterday, I spoke about it with Chimezie, actually, because Huawei are now on a huge marketing tool in Britain to try and save their business, as they believe that Prime Minister Boris Johnson may indeed be having cold feet about Huawei building up some of its 5G network.
We'll see how that goes. Now, the Business Secretary, Alok Sharma, has confirmed that non-essential shops in England can open from Monday. Of course, that's to allow high streets up and down the country to spring back to life. What shops are reopening, and tell us how relieving is this news?
Well, this news is relieving. It's something that's been coming. It's part of the British government's phase of getting the UK out of lockdown. But really, I suppose this is all about England. So yes, on June the 15th, retail stores will be open. This will include all non-essential shops. So that means department stores, the famous John Lewis, Selfridges, Harrods, all of them. Although not all will be opening on Monday. I believe there will be some phase stages. Some will open some of their stores that are more popular, and some of the less popular ones will start opening by the end of the week. We did actually hear on the media, on the British media this morning, that these non-essential stores also include zoos and safaris. So for parents who have been struggling, quite frankly, with their children at home for the past 3 months, they'll be able to take their children to some outdoor activities. So it is seen as a good thing, particularly, of course, for retail, who we all know has been really struggling over the past couple of years, particularly the British High Street. Last year was the worst year on record since numbers began. I believe that's about 25 years, because they're not getting the footfall in. So the Chancellor of the Exchequer, Rishi Sunak, he's been doing the rounds on media as well today, urging people to get out, urging people to start opening up their purses again, and telling people that it will be safe, because one of the caveats about opening up on Monday is for retail managers to make sure that their premises are COVID-19 safe. So if you are going to be refunding clothes, those clothes will no longer be available on the racks. And you will have to make sure that, there's lots of pumps to clean and wash your hands. So Monday is a big, big day, and Britain are hoping that this could signal a relief for the economy.
I can only imagine. Now, let's talk about a new report by New Economics Foundation warning that 70,000 jobs in the airline industry are at risk in the next 3 months due to coronavirus pandemic. That's certainly more bad news for the aviation industry.
Of course, it's bad news, but unfortunately, Bissy, this has been a long time coming. We've been speaking about it over the past couple of months. We know that the aviation industry have felt the lion's share of the bruising battle that's come out of the COVID-19 pandemic. They have millions upon millions of people employed across the world, and since the shutdown, it has drastically affected them. Major airlines, particularly those in Britain, have announced job cuts. Ryanair, EasyJet, IAG, BA, they've announced it. And now this report is saying that they expect 70,000 jobs to go within the next couple of months. But the report actually says it could be as high as 124,000 jobs. So what they're asking the British government to do is, alongside the furlough scheme, which is the British government's way of keeping employers paid, they also want there to be some sort of scheme that helps people who are likely to lose their jobs to be retrained so that they don't just go into the unemployment system, but they can go into other parts of the employment sector. So it's another stark warning for Prime Minister Boris Johnson. He'll be at the dispatch box in a couple of hours. And along with all the race riots and other issues that he's got to face, I think the economy and unemployment is likely to be another one of them.
Many thanks, Juliana. We'll see you again later. And it's back to Temple to take us through the debt and currencies market. Over to you, Temple.
Thank you, BC. Well, yesterday, if you look at the bond side of the market, we saw some serious buy activity on this at this end of the market yesterday. A lot of investors looked at the 2022 paper, which you have here. And of course, that helps to cancel out some rise in yields across the 2026 paper, January 2026 paper, and the February 2028 paper in the market. That informed the average decline that we saw in yields yesterday in the market. Basically, we had 30 deals in total, apart from all those transactions, and of course, worth 17 billion naira in the market. Look at the NCB end of things. We've got retail trading here. There was no movement in yields. It was just 70 million naira that we had in total at this end of the market. But look at the open market operation side of the maturities. We saw more activities here as well. If you look at the shorter end of the curve, and of course at the longer end of the curve, that's where you have the 2020 papers, December 8th and December the 1st. And of course at the longer end of things, where investors also continue to indicate their interest, to channel their interest, you had all of those interests here. Basically, we had a decline of 6 basis points in yield yesterday across the market, in spite of some selling that we also saw across the open market maturities. But we have Chioma Udu, a fixed income dealer with Guaranty Trust Bank, joining us via phone. Thank you so much. Can you quickly tell us what exactly is fueling this renewed interest, especially at the OMO maturities?
Hello, Temple. Thank you for having me. Tomorrow we have an OMO maturity of 92 billion. As you know, local investors are not permitted to, or individual investors are not permitted to take part in the auction. So it's basically offshore and banks. So we anticipate there's going to be a lot of interest in that space because coming in today, the system opened over 160 billion long. People are looking for ways to invest their funds. We've seen investors looking for other investable assets to put their funds in. But like you earlier said, it's just a yield chase around the market.
Now, talking about the opportunities or areas to channel outlets for the oil investments, we had some primary market activities, corporate commercial papers rather of MTN recently. What opportunity did that posit to dealers and treasurers in the markets?
Well, we've seen a lot of interest, especially from individual investors, because of the liquidity we don't have a lot of fixed income assets in the market itself. So we've seen them invest into assets like commercial papers. We saw interest in MTN, and we hope that we'll see other commercial papers where investors can look at. But there's a lot of interest in that space as well.
Right, Chioma Udu, fixed income dealer with Guaranty Trust Bank. Thank you so much for your comments. We appreciate them. And let's hope that you have a very positive outing at the NCB auctions today. Back to you now, BC.
All right, Temple, of course, let's continue to hope for a profitable trading day. Enjoy the rest of your day, Temple. And that's where we wrap up today's program. Thank you so much for watching. I am BC Adebayo. Bye for now.